How's it going, everyone? It is Andre Williams, and over here we talk stocks and we focus on one thing. Always protect your profits. We also got to put the disclaimer. I'm not a financial advisor and this isn't financial advice. So just know when you do invest, you're doing it at your own risk. So the stock we're going to be talking about today is DraftKings. They ended up releasing earnings on Friday, and of course the stock ended up selling off. But I do see an opportunity here. So before we get started, you guys know we got to go over the agenda. Also, in all my videos, I have timestamps down below in the description just in case you might want to watch certain parts of the video. So to continue, the first thing that we're going to be going over is in regards to earnings, right? We're going to see what's up. How was the revenue? Did they make any profits? Hey, what was it actually looking like? And what did Wall Street actually think about it? Then afterwards, we get the CEO's thoughts and opinions as well as the future outlook, which I think will be great for anyone who is interested in this stock or maybe you're already invested. After that, then we're going to be doing a technical analysis. We want to see, is this stock going to continue to dip? Because if so, it definitely does provide an opportunity here. And then after that technical, we're going to be taking a look at the institutional ownership. We want to know, have institutions been loading the boat for DraftKings? Have they been taking advantage? We want to know. And then we're going to be taking a look at the short interest information. We want to see, is there any short squeeze potential? Yes, it's sold off quite a bit. Have shorts been taking advantage of that? Well, we're going to be finding out. And then when all of that is done, I'll be giving you guys my final thoughts. You guys know in all my videos, I want to make sure you got a lot of value so it can add to your homework and your overall due diligence. So let's get into it. So now on Yahoo Finance, and we're going to be taking a look at DraftKings tops revenue estimates and raises full year outlook. This came out yesterday at 4:04 p.m. So let's get into it. DraftKings Inc. said its first quarter revenue topped analyst expectations and the company boosted its projections for the year. The online gambling company reported record revenue of $312 million in the first quarter, beating estimates of $239.4 million, and now expects $1.05 billion to $1.15 billion in revenue for the full year, up from a previous forecast of $900 million to $1 billion. DraftKings posted a loss of 87 cents a share, worse than analyst estimates of 44 cents, driven by sales and marketing expenses. Excluding some items, the figure was 36 cents. See more details. So just to kind of go over that very quickly, yes, revenues have gone up and also their projections have gone up, but since they've been spending a lot of money on sales and marketing, it's definitely had an impact. Now let's go over the key insights. The results showed that Americans continued to bet on sports and play games like poker and blackjack on their phones, despite the U.S. economy reopening as vaccine distribution ramped up. The guidance assumes that announced professional and college sports calendars come to fruition. DraftKings is off to an outstanding start in 2021, CEO Jason Robbins said in a statement Friday. DraftKings reported a 114% increase in monthly unique paying customers to 1.5 million, topping the average analyst forecast for 1.19 million. The growth was fueled by strength across daily fantasy sports, online sports betting, and iGaming, DraftKings said in a statement. Shares of DraftKings and closely watched peer Penn National have stumbled in recent weeks due to bumpy legalization in states like New York, and as a key seasonal catalyst like the Super Bowl and March Madness are now firmly in the rearview mirror. Despite strong results, Penn National Gaming Inc. became the latest high-flying stock to tumble in the aftermath of earnings, something DraftKings investors will be wary of. Market reaction. Boston-based DraftKings slumped 6.7% to the lowest since January the 5th after reversing initial gains. The company has shed nearly a third of its value from a mid-March record, but the stock still has more than doubled in the past year. So that's what I wanted to kind of share with you. That gives a really good summation in regards to the earnings report. So here's the next article on Yahoo Finance where the CEO pretty much gives his opinion in regards to earnings. Shares of online betting platform DraftKings were down nearly 7% at market close on Friday after the first quarter financial results that reported a wider than expected loss and higher expenses as more parts of the U.S. legalized sports gambling. but DraftKings CEO and co-founder Jason Robins struck an optimistic tone when speaking to Yahoo Finance Live on Friday, noting the company beat estimates on earnings per share and raised its full-year guidance by 16% amid increased enthusiasm for sports betting. We're seeing nothing in the data to suggest any slowdown, Robins said. In fact, Q1 was as much continued momentum as we saw in the back half of last year, and really we see nothing to suggest that there's anything going on that would cause any sort of headwinds. To be sure, DraftKings reported some good news in its Q1 financial results. Monthly unique players spiked by 114% compared to the first quarter of 2020. Average revenue per MUP jumped 48% since the last quarter last year. Still, as Wall Street Journal noted, sales and marketing expenses quadrupled year over year, leading to a loss of $139 million compared with $51.6 million in a year prior. The increased marketing costs come as more states in the U.S. legalize sports gambling. According to the American Gaming Association, 21 states plus Washington, D.C. currently allow sports gambling. Meanwhile, 6 states have legalized it and 14 others are considering laws to do so. Explaining the growing popularity of sports betting, FanDuel president Amy Howe previously told Yahoo Finance Live that gambling had become a mainstream part of live entertainment. Robins, who operates one of FanDuel's main competitors, is seeing the same shift in his business. Kind of gone are the days where passive consumption of content is the norm, Robins said. People want to interactively consume content, whether that's playing games, the fantasy games, or bets that DraftKings offer. Whether that's tweeting or text messaging with your friends while you're watching a sporting event, I think that's a trend that's going to continue. Sport fans might actually be more inclined to gamble on specific plays or smaller portions of the game than the game's overall result, Robins said. It feels more casual for bettors, he explained, and likely results from a gut feeling rather than pre-game research. DraftKings, along with FanDuel and Caesars Entertainment, will be an exclusive gaming partner of the NFL this season. As Robins pointed out, live bets keep people on the edge of their seats, something that's beneficial for sports leagues' television numbers as much as it helps companies like DraftKings. It's still early in the overall process, Robins noted, as more than half of U.S. states don't have legalized online sports gambling. But Robins pointed out that at a recent investor day, DraftKings projected that if the other states do eventually legalize online wagers, the business market opportunity could surpass $60 billion. It's obviously a tremendously big opportunity any way you slice it, and we are very early on in the development of it. So it was great to hear this update from Mr. Robins in regards to the earnings report. And this is part of the reasons why I continue to stay bullish on DraftKings, because they definitely have a lot of potential here. So we're going to be doing a technical analysis for DraftKings that ended up closing on Friday at $48.42, being down 6.69% on the day. On the low, it tested $48.16, and then on the high testing $53.51. So as we take a look at the chart for DraftKings, we definitely see it's looking very bearish here. So it does leave some opportunities, especially if you believe in the company long term. If the stock does decide to pull back, I'll be definitely looking for this area of support here at $46. If this area does ever end up breaking, then I'll look out for that next level right here around $44. And if that area does decide to end up breaking, then I'll be looking out here for this $42 level. So those are the areas I'm definitely going to be keeping an eye on, because like I said, I believe in DraftKings long term. As far as the sell-off is concerned, it's definitely noticeable. It's below all of our indicators in regards to the 200-day, the 100-day, and as well as the 21-day EMA. So by giving you guys those potential areas of support where it can pull back, if you are interested, I definitely see some opportunities here. Another thing also to take in consideration for this stock to begin to look bullish again, it's definitely going to have to reclaim back to the 21-day EMA at $53.22. Is it possible for that to do that by the end of the month? of course, but at the same time, it's definitely looking bearish, and that's something I want to bring to your attention. Also, if we take a look at the RSI down below, it is in that oversold territory, being at around 25. So we know if it's 30 or below, we are getting it at quite a steal. That means that the stock is oversold. So there's a good chance come Monday it could end up having a rebound, but I just want to make sure you guys are prepared just in case it pulls back further, so you can get this stock at a great discount. I know in regards to the response of the earnings report, we notice a lot of stocks when they're getting earnings, they tend to have sell-offs, and this is exactly what we're seeing with DraftKings. So that's what I want to bring it on your radar so you know what's going on and if you have any interest. So we're now on fintel.io, and we're going to be taking a look at the institutional ownership and as well as the short interest information for DraftKings. So as we scroll down on the page, green rows indicate new positions while red rows indicate closed positions. Do keep in mind, if you do not see any green or red, what this means, institutions who already have positions are making adjustments in regards to purchasing more shares. So as we go on and we continue, we could see here as of May the 7th, there was definitely a lot of activity among institutions. We could see on the 7th, we had one institution that ended up closing their position, which was Cypress Capital Management, and they had a call. And we also see that Brighton Jones back on May the 6th also closed their call as well. But aside from that, institutions have definitely been looking very bullish for DraftKings. We could also see where the average costs are in regards to what their positions look like. And we're seeing everything that's in the $50 range. So keeping in mind that the stock currently trading in that high 40 level does provide a great opportunity because you're getting in at a better price than a lot of institutions. Another thing to also take a look is the short interest. So the short volume ratio stands at 23%. So we know if it's 21% or higher, there's definitely some short squeeze potential here in DraftKings. So as we scroll down on the page, updated 15 minutes ago, short shares availability stands at 6.4 million, and as well as a short borrow free rate, which is fairly low at 0.34%. Taking a look at the history of the short volume ratio, it being at 23.49% on May the 7th is fairly high, especially if we take a look at previous history. But we did end up having a high here at 24.62 back on April the 29th. So we'll continue to keep an eye on this. But like I was saying previously, if it does decide to pull back even further, I see a great opportunity here because I believe in the long-term prospects. So for my final thoughts for DraftKings, I am still bullish on this stock. I love the comments and the feedback that we got from the CEO in regards to the earnings and showing us the future outlook. The fact that they increased their overall guidance, so they said, you know what, we're going to be making even more revenue in regards to the projection going in towards the end of the year. And then also on top of that, they ended up knocking out the revenue estimates out of the ballpark. Yes, the one thing that's actually, or you know what, the one elephant that's actually in the room, I should say, as a better term, is the fact that they spent a lot of money on sales and marketing. But you know what? I am not fazed by this. And the main reason being is we already know as far as sports betting, it is not legalized everywhere in the United States. But there are states who are opening up to the idea and saying, you know what? Yes, we will legalize it. So far, if we take that one thing into consideration, if more states start legalizing, which a lot of them are going through the process and so forth and considering it, then there's definitely some big time upside for DraftKings to actually take advantage of. And this is why I look at this as an opportunity. Like I said, when it comes to growth stocks, especially in the environment that we're in, I feel like a dollar cost averaging approach is the smartest way to go with this. Why? Because if it does decide to dip back even further, we could take advantage of those opportunities. We do see that institutions are loading up on DraftKings, and even as of Friday, we had Kathy Woods from ARK Invest loading up even more. So you definitely have to have a forward-looking approach when you're going to be deciding to invest in DraftKings. If you don't want to invest in the stock, hey, that's okay. That is fine. But I do feel like you're missing out on a big opportunity, especially just imagine when all of the states or most of the states end up legalizing sports betting. Whew. Things can get real serious, and DraftKings can actually benefit from this. And also, if we take into consideration as far as analysts, the price targets and so forth, it's a lot higher than what the current price is right now. And if it goes down even lower, even more upside and profit for us. So I hope you guys enjoyed this video. We'll be talking real soon. Peace.